All right, time for another candy store update, which is my personal portfolio. So in my last update, we had some stocks. Then I added some right now, and let's take a look at the performance. So first one, Paltalk. Yeah, I just had a tiny amount of this. I did sell it at the top because I was chicken and I didn't want to wait for the release of the results, and then it crashed because they were delayed to December. Now it's December and they delayed it until next year, probably July or something like that. So this legal issue keeps getting delayed. So I already solved it and will not be buying again. I do not like delays because time is money. So Paltalk is gone. Next one. Let's talk about Prospera Energy. Prospera Energy is actually flattish. They are drilling new wells. They already have, I think, 3 wells. Doing the 4th well right now. Not sure what the status is, but I have seen the production estimates for the flush production around 100, 120 barrels per day. I'm not too excited about these numbers. That production will probably go down in the future. So I did the calculations. It's not that interesting at this moment to buy. So I sold Prospera Energy. I think it will go up. The oil price will go up, but you will need to wait at least a year until they do the new drill program next year to increase production. But it's going too slow for me. And the well results were not that spectacular. So this one is also gone. So Prospera Energy, delete. And instead I bought Hemisphere Energy, which is also an oil producer. But this one is almost 100% heavy oil in Canada. So it's like Prospera Energy, but more oil. Prospera is only 70% oil. So this one, compared to Prospera Energy, has no debt. Prospera Energy has debt. This one has no debt. And it's at a PE of 6. So it's pretty fair value, but at least you get a good dividend. 10%. They added a special dividend even, so it's 10% dividend now. So that's very good. I like 10% dividend stocks, and I bought it here, so it has already gone up. And now oil is probably going to keep on rising to 100. Yeah, the rig counts are still down. Production is not rising that much. So I think oil will go much higher. So Hemisphere Energy, new holding. Let's take a look at the numbers. So currently the WCS price is around 65 US dollars. That's around 85 CAD. This one has a discount of around 8 CAD, so it's around $80 now. So this is the NPV chart. It's not that great, but at least it's debt-free. You get some dividends, around 8% per year. It's not bad. Okay, it's not bad. I like the balance sheet a lot because there is no debt. Yeah, you can see there is no debt here, and these are just the current liabilities, and they have enough current assets. Here and there, so there are some decommissioning obligations, but that's only in 16 years from now. They have 16 years life 2P reserve, so you will get a lot of cash flow, and oil is going higher probably. Leverage is not that great. It's only 1.6 leverage to oil, but at least there is some leverage. And yeah, just wanted to diversify a bit into oil as a hedge, because we know that this is going higher. So that was Hemisphere. Then we have Monument Mining, another new holding. This company is a gold company producing in Malaysia, and they are in commercial production right now. So they're still ramping up. They did have some issues with their production ramp up, but I assume that they will resolve it at some point. So yeah, production was still at a recovery of 61%. I take it that it will go to 80% recovery at some point. Grades are pretty okay, 1.9, 1.7, 1.8. So these are high grade open pit ore. So that's good. The ore processed design capacity is 85,000, so they are not at full capacity yet. So that will also improve. And AISC is probably around 1,000. So production is 40,000 normally, and probably 10-year mine life when you look at the resource. So cash flows are flowing in, and I don't know if they are going to create the BIOX plant, but without the BIOX plant, this will go to the enterprise value pretty quickly in about 3 years. So very high cash flows, very profitable. And other than that, they also have the Murchison asset in Australia, which is worth around 10 to 20 million dollars. So this is the Murchison asset. I added it here as well. They want to bring this in production in a year or two. So this also has a value when you add everything up. This is actually extremely cheap. So we know that gold is going up, so this will probably also go up with the gold price, and the chart looks pretty okay. It's in an uptrend. So that's Monument Mining, and then we have Goodfellow. I re-added this company because yeah, the Canadian housing starts are actually pretty okay. We had Canadian housing starts today, and they were up. They beat expectations. So yeah, there are bears in the housing market, and there are also bulls in the housing market. Let's take the midpoint of that. I think also that lumber has bottomed out, doesn't seem to drop anymore. So why do I like Goodfellow? Well, at first, I only looked at the PE ratio, which is around 7, which is also good. PE of 7 is not bad. PE of 7. These are the financial results. Equity keeps rising. Okay, the revenue has gone down a bit due to weakness in the construction sector. But look at the housing starts, they are still rising. Lumber has bottomed out. Hopefully it will not drop further, but you never know. And it is a profitable company. So net profits are above 0. Okay, so I know that there is some weakness, but the reason why I bought this is because of the balance sheet. Look at the balance sheet. The latest balance sheet is this one. Okay, this one, August 2023. And you can see on this balance sheet that, first of all, the equity is $200 million. 200 million. Okay. What is the market cap? 100 million. So it's trading at half book value. That's already very cheap. And then second, when you look at current assets, you have 200 and liabilities 60. So if you do this minus this, then you still have 130 million in liquidity. So 130 million in real liquidity. That's amazing. So you can pay off all the liabilities and still have 130 million in liquid assets. Now, granted, it's all inventory, 100 million in inventory, but these are really liquid. So that's about 130 million, right? 130 million. And when you calculate the enterprise value, including the inventory, then you get a negative enterprise value. See? Negative. I'm not kidding you. So we have the market cap of 100 million minus 130, which is minus 30 million. So we have a company that's actually completely undervalued. And cash flows are coming in. Normally, a normal company should have an enterprise value somewhere here, right? 60 million, maybe 60 to 80 million enterprise value. Instead, this one has minus 20 million enterprise value. This should actually go from minus 20 to 60. So market cap should rise by 80 million. Okay, my market cap should rise by 80 million. So this should go to 190 million, maybe 200 million. So almost a double is possible. Yeah, so this can easily spike upwards like this. And the only thing that they need to do is sell their inventory, 100 million in inventory. If they can do that, then they will convert this into cash. And this here will go immediately to here. Okay. So I really like this company, not because they have a lot of cash flow, because it's only PE of 7, but they have so much inventory that the EV is negative. So that's why I bought this. And they pay a good dividend of 7%. They have no debt. So hopefully the housing market will be stable and this will keep on rising. So that was Goodfellow. Then we have Trigon Metals. This company is a bet on copper. It has not done well, but it's stable. Still at 0.2, so it's not up, it's not down. It's actually just floating around here. And we know that copper has been very weak. Yes, I'm not too bullish on copper, but analysts say that next year copper should do much better. more than 50% say that copper will be the best metal for next year. I don't know why, but they say that. I see that China has not been that great for copper. Demand is not as high as Goldman Sachs has said, and inventories are not dropping as they said. So there's some weakness in copper. We will see how this evolves. But I think 3.7 should be the equilibrium price, which is good enough for Trigon Metals to survive. So let's hope that copper will actually go back to 4. But the reason why I still have Trigon Metals is not because copper. I am bullish copper in the long term, but Trigon Metals is much better on fundamental basis than other copper miners. So this is a typical copper miner like Capstone Copper. You have an enterprise value here and cash flow comes in over several years, and it never goes to the enterprise value. But when we look at Trigon Metals, there is a huge difference. You see how the cash flows actually soar above the enterprise value. That's the only reason why I like this company. They say that they are going to go from the current 5-6 million production to 30 million and then 60 million. That's almost a 10-fold. Yeah, it's more than a 10-fold in production in only 3 years. And they are already in production with the open pit right now. Next year, they will go in the underground, and then they have underground production, and then they will expand that in 2026 and triple it again from 20 to 60 million production. And you can see how much that cash flow is. Cash flow is around 70 million CAD. That's much higher than the current enterprise value, right? So very undervalued company. Cash flow is actually double the enterprise value. So if you do a 5 times multiple on this here, you should see a 10x, right? 5 times 80 million is 400 million and currently only 40 million. So that's a 10 freaking X from here to here. So that's what I'm betting on, and I will keep holding it. The only thing that can deter me from holding it is, of course, if copper goes to 2.5, then I will sell it. If copper goes to 2.5, then our thesis is completely wrong about copper. If it goes back to 2.5, then yeah, I will sell it. But currently, I still think we will hover around here and start going higher in the coming years. We do have a deficit in copper. So that's Trigon Metals. Still think that this will double by next year and then 10x in the coming years. Then last but not least, Soma Gold is still my largest position. And I am not selling this until the real value is given to me. And the real value is probably at $1. So I'm waiting for that. Gold is rising. I think gold will eventually go above 2000, maybe 2200. And then you know what Soma Gold will do? This is 5 times leverage to the gold price. So if it only goes to 2200, If gold goes to 2,200, that would be a 15% increase. So Soma Gold will go up 70% then, because it's 5 times leverage. So that's what I'm betting on. Let's take a look at the evaluations. You can see here the cash flow coming in. It looks very stable. It's like one straight line to heaven. So I don't see any problems holding this. They will decrease the costs probably to 900 to 1,000 by next year. They are still doing some research on the mill, whether they will move it or not. There's a lot of things they need to consider. Then we go to around 50,000 production at some point, then 80,000. And yep, they're doing a lot of exploration to increase the mine life. It's currently around 7 years of mine life. Can easily go to 10 years mine life. Because why? Because this production is so low. Production is still at 36 to 50,000. It's very easy to find more resources than this. If you already have a big production at 200,000 or 250,000, then it will be much more difficult to find new resources to replace it. But this is only 36,000 production, so it's really easy to find more resources. And yeah, so we continue to own Soma Gold. Here you can see some of the upside, 2,000 to 2,200, easily going to 300 million from the current 70 million. If you take 5 times free cash flow, if we look at 5 times net earnings basis, if gold goes up, we will hit around 150 to 200 market cap based on 5 times earnings. So that's still a double to a triple. So plenty of upside if gold goes to 2,200. So Soma Gold, we continue to hold this, and this is our current portfolio. So that was it, and I'll see you in the next video. Bye.